Everybody. Good day. I guess it's still morning, right? Good morning. Let's see. Let's get the screen up and shared on the right thing. My man Jack out there in Colorado should be here in a minute. In a minute. All right. I guess we'll start here. All trading involves a substantial risk of loss. You might lose money doing this thing we do called trading. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling anything in the markets, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money. If you want somebody to tell you what to do, what to actually buy and sell for your personal financial situation, you need to hire and consult a financial advisor, which is not what Jack and I do. We're just a couple of dudes that get lucky in the market a lot.
That should be our tagline. Just a couple of dudes that get lucky in the market a lot. You know, this guy tells me the harder I work, the luckier I get.
Yeah, I tell you. I booked out some profits here rolling forward on Soundhound and DJT right here.
Very nice. Let's explain to the good folks what the rollout is all about.
Yeah, so what I did, I took my options, in this case, it was a put, just a naked, some people call it a naked put. It's actually cash secured because I have the cash to buy the shares. I sold those on the 3rd of October for 37 cents with a commitment to buy these shares at $16.50 a share. I got paid 37 cents a share to do that times 500 shares right here. Quantity five contracts. Each contract's 100 shares. So I collected some money and I closed it for 6 cents on the 8th, which was yesterday.
So
And at the
just
six,
just to back up a little bit, that first trade on October 3rd, that's sell to open.
yeah, sell to open. That's the red sell,
Close that trade, you buy to close,
buy to
and then
close.
sell to open another.
And at the same time, I sold to open next Friday for more credit. The more credit, hold on, I'll have to pull that up on another screen here really quickly. The more credit trade, get the right one, is right here. I went out to the 17th. I actually went up and out, as they call it. That's out 1 week, up one strike. Got paid a net credit of 45 cents to do this, which was higher than the original entry to the trade at 37 cents. So I collected 225 bucks to make that commitment to buy the shares at 17.50 now.
I like that too, Pete says. Pete says, I like it. I like it. I like it also.
And then I have 1,200 DJT shares that I got put way back. Gosh, I don't even know. I've collected about $3 in income per share at this point. So I got put them at 19. I've collected about $3 of income on those shares. Either the puts before or the calls afterward. And I'm committing to sell them at 19. I keep doing this week after week. Basically, the price I paid for them, I'm committing to sell them, getting paid. I rolled that one forward also for another week, which is buy back the ones I had sold, the commitment I had to sell it at 19 for this week and sell a new one. I got paid 11 cents credit to do that commitment to move it forward a week. That was 132 bucks. I just keep working those shares. They haven't really done much of anything. That was a highly volatile stock, and it's just gone flat. Hadn't really done much for
But
2
still
months,
paying you.
but it's still paying good money.
Yeah,
We can look at the
cash flow is where it's at. The stock doesn't have to do anything. You could still make cash flow.
see. It's kind of done. It just kind of came down in here and sat still for 2 months. All of August, all of September. Now we're working on October. I keep selling the 19s right there above. It was hanging out in this area back here in June and July. I kept selling those 19s, not getting put, not getting put, not getting put. Then I got put, and now I've been selling upside calls. Just keep making income on this.
Making income. Yeah, this looks a lot like when I did this experiment publicly with Apple. This chart exactly looks like it. And people were saying, Jack, how can you make any money? You're saying you made this money on Apple, and Apple hasn't gone up. I thought the only way you could make money in the stock market is if the stock goes up. And here you're saying you've done this 9 times on Apple, and Apple hasn't gone up, and yet you've made 30%, and Apple has gone down 2%. How's that happen? This is how it happens. Now you just have to put a little marker on the chart there for the days where you did that and rolled out, and you can see that you could still make great money, and you don't need the stock to go up. It helps, but doesn't have to be the case.
Yeah,
And this,
essentially every week I've been selling premium here every, four
so at
times a month. So
the top of that red line, if you wrote down, the amounts, you could just see, people could just see how it all stacks up, right? Even though the stock hasn't gone anywhere. And if you continue to get put the stock, or if you just stay in the stock, you could put what I call now the red hat on it, like you did on the actual red hat, where you just stubbornly stayed in it and sold calls against it until you got what you wanted to get out of it. And I'm calling that the red hat treatment.
hey, I kind of love doing this stuff. It's one of the, it's one of the
Well,
trades I've been doing my entire adult investing life is doing this.
But
And
what I love about you and the way you do it is you're stubborn. And, and that's what you have to be. You have to be stubborn and persistent at this game. And that's what you are. And just by virtue of what you did with the red hat, if you want to tell the good people what happened with that and how it worked out and why I love it, that's why I call this, if it keeps going sideways or down, you just put the red hat treatment on it. So tell the good folks what happened with red hat.
yeah, I was trying to, let me see if I can even find what happened with Red Hat stock. Let's see.
It's a great lesson for everyone, a
And
lesson of persistence.
let me pull this up. And here's the last quote I could find right here. So this stock, way back, it IPO'd in the heat of the dot-com
Yes, it did.
bubble. This thing went public just like so many other dot-coms. This was a variety or a flavor of Linux, which that get oh, it starts to sound nerdy, but Chrome OS is Linux, Android is Linux, Mac OS is a flavor of Linux or Unix, technically BSD. All these operating systems we use all the time are based on this kind of thing, and these guys had a flavor back in the 90s, and they went public with a company, and their stock price shot up like crazy. I don't even know if I can get the all-time history on this thing. Probably not.
Yeah, if you got an IPO on this thing, it just blew your mind. Look at that. Yeah, what did it come public around 20?
Yeah, it went public back here in 20. Yeah, I don't think it'll pull it back at all. Let's see. I'm trying to get it to pull back to the beginning. It had a shoot up and then it went in the dirt when the dot-com bust happened.
Uh-huh.
And
Boy, people were all over this. Institutions, hedge funds, everybody in the game that I talked to had a stake in either buying and holding or trading the heck out of it. It was so hot, man. And then it just got its face punched in.
yeah, see, well, I might be able to pull that back and see that. Yeah, here we go. Right in here. Here's the meteoric rise right here. IPO'd right here, 1999. Shot up. Crazy. Did I get the IPO? No, I did not. Did I buy up here? No, I did not. What I did do though, here in 2021 or 2001, excuse me, 2001, I think rewind 25 years ago, 24 years ago, 2001, I picked up some shares. I paid one of my accounts, I paid $5.50. Another account, I paid $3.50. I had two accounts. My personal account was $5.50 a share.
Now look at that from 2001 to 2003, folks. That's called dead money.
Yeah, this thing just sat there doing nothing.
So if it
But
did nothing, again, how did you make all this cash flow off of a stock doing nothing?
So I started selling upside calls. In the beginning, it wasn't I was getting pennies. And I was having to go out. Back then we didn't have a bunch of these weekly options and stuff like that. It was monthlies and quarterlies and sometimes yearlies. So I'd be jumping out like 3, 4 times a year. I'd be picking, sometimes I was going out 6 months or even 9 months to be able to get any kind of credit at all on the above what I paid for it.
Have to do that.
And and I just kept doing that. And I did that for like 18 years.
Now, see, right there, that's what I'm saying about persistence, folks. This guy, I mean, most people would have thrown in the towel, moved on to something else, but it's your persistence and consistency with that one strategy that got you the green.
I think the last time I sold calls was right here. Was right in here. That was probably the last time. Now, when you have a cost basis of 5 and it goes up to like 80, a lot of people will be like, I'm ready to sell, right? Made some money. I actually had a negative cost basis by this time. And then it started really moving. And I quit selling calls because I was nervous about getting called out. Um, my one account I was in it for $3.50 was for my dad. My parents had exposure to this, and I let their accounts get called out. I stopped doing it in my account and just held on. And in 2019, I believe it was, yeah, 2019, IBM announced they were going to buy this stock out for like $190 a share. And come 2019, my little account that I only ever put like a $600 investment into, $500 investment, something like that. That little account was worth $26,000 when and I hadn't really done any other trades. It was just this trade in that account. It was a retirement account. I'd funded it one time back here in 2000, and now it had $26,000 on one trade. And think about that though. IBM bought it out for $190 a share. That's only $19,000. Where did the other $7,000 come from? The other
So,
$7,000 came from almost 20 years of selling upside calls against that one set of 100 shares. So anybody that says you can't make money with just 100 shares and doing this wheel strategy is just sowing a bunch of bull crap, essentially.
yeah, this is where it's at. And to make all that money all those years, like that's a magnification of what I did with Apple while it was going sideways. But this just goes to show you persistence and determination can win out almost every time when you're in a struggle if you stick with it and you got the time to stick with the system. That's what I love about the way you trade and your personality and how you did it.
So if anybody has any questions, you can ask. I'm willing to talk about this, but this was a wild ride,
Yeah. And
wild
now
ride.
since that happened, and I was so impressed with it, whenever I see a stock like the Trump thing or anything, even stuff that I'm in, and I just think I'm going to give this thing the red hat, right? I'm just going to stick with it and sell premiums in it till I get what I want out of it. And if that takes 18 years, then so be it. But I love the way you traded it. And I like that term. We're just going to put the red hat on something that's not moving, but we could still bring in premium.
Yeah, I'd actually bookmark this page because we're probably gonna come back and talk about this more. This is probably the single best trade. Everybody thinks that the best trade was when I made $1 million there in COVID, but this actually is probably the single best trade when you think about it percent wise that I took 550 bucks and turned it into 26,000 bucks. I mean that to me is I haven't done anything else like that. I haven't done any other 18-year trades. So
Yeah.
um, that's that took a lot of work and persistence. And as Jack said, I'm kind of a hard head about it. Um, I think any trade can work out, really, if you give it enough time.
Yeah, I agree. 18 years is proof. Anybody would have stuck in it for 18 years, but they wouldn't unless they know that they can cash flow it. Is that your jet right there?
Nah, not my jet. It's just that's a came with a desktop, I think. Let's see.
Like
Looks like my browser crashed out.
somebody's in Florida.
So here we go. Let's see. Restore. Don't give out my personal information.
Yeah, the
There we
jet
go.
situation here is kind of funny. I don't know if I told you, but I had to take a Uber down to get my motorcycle worked on, and this guy was telling me that he just got done bringing these people in from this town way out west because there was no jet parking in Aspen at the airport. It's really small. There's probably 100 or 200 private jets out there for all the billionaires, and even in that world, they try to show off who's got the biggest and best jet. But they had to fly in about an hour, 2 hours, hour and a half away, and the guy brought him back, and the lady was really upset that she could not have her husband's jet parked in Aspen. Really upset. And like a week later, he's taken her back to Rifle, the other town where they parked their jet, and she's complaining about having to pay $40 for a sandwich at the Aspen. And he's telling me all this, and I think, wow, those are some kind of problems you have if you're a billionaire. You can't park your jet in the town you want, and you got to bitch about paying $40 for a sandwich.
I'm sure the landing fee was like way more than the $40 a sandwich anyway. Like I've got a small plane, and I usually have to negotiate to make sure I don't get landing fees because everybody thinks if you got a small plane, it's your big money. But my
Yeah.
my little small plane costs I could probably buy probably five of them for what I paid for my Cybertruck. So
Now, when we meet in January, you're going to fly down?
not probably not. I'll probably drive my truck down so that I can get around town.
Cool. Yeah, Bodine says if they want to be the Billionaire Adventure Club, they should parachute out and let the pilot continue on. Yeah, that's funny. Now, Doug C has a comment that we got to touch on. Doug says, Jack, tell us about your new income machine being rolled out on Sunday. First of all, Doug, that is not mine. That is my good friend Jeffrey's. I can't tell you too much about it other than it's one of the most amazing things I've ever seen. I'm hard to impress. And this thing has me so impressed. I think I'm going to lose sleep on Sunday night because I can't wait to use this. It's a tool on Monday. And that's all I'll say about it is it's unlike anything you've ever seen. I know that because it's unlike anything I've ever seen. And I can't wait for you to roll it out. Rob Royer says helicopter is the way to travel. Yeah, it is.
Hey, right up until the engine stops, and then it's just a big rock.
Yeah, and it's a
You can
big,
auto gyrate or whatever you want to say, but it's a big rock in the sky. There's no wings to glide you down.
it's a big rock. When that thing starts going down, it's always bad with a helicopter.
Let's see. I'm gonna type in the registration link for this Sunday. Trader.com/CB. For whatever reason, my copy paste link was missing.
Don't miss it. Sunday.
Yeah, make
And
sure you register. And Jack, we'll probably have some encores, but nothing's like the first time you do it.
nothing's like the first time. Plus, on Sunday, if you want to get in on the action, you can use it Monday, Tuesday, every
Yeah,
day. You'll
yeah,
see.
exactly.
You'll see. This is it's mind blowing. I don't want to talk too much about it or give anything away about it other than to say, be there Sunday. You'll be glad you did. This is one of the most impressive things I've ever seen in my life. So it's got
I,
that.
I, I'll tease this out real quick. Just make it fit on the screen here. Here's how many trades we've had in here since the beginning. This is the kind of win rate we've got. If you had risked $1,000 on every trade, this is the kind of number you would have this year.
Wait, brother.
So it's just crazy. This is crazy. I mean, there's your profit factor. There's your, average winner, average loser. Losses are full losses. These are credit spreads. So these you can see just we've part of this is back test, but right now this is the live trade tracker, and this is my copy of it that I posted in Discord yesterday for my Turnmire Trading Lab members. So
And this is revolutionary in a way. Yeah, this is not 0 days to expiration, Deborah.
Yeah, it's not 0 days. This is 1 day to expiration. So it's not necessarily day trading. It doesn't have to be day trading. Um, yeah.
Let's save the juicy bits for
Yeah.
Sunday. 'Cause otherwise, I know we're going to talk too much.
Yeah, we're gonna sit here and talk about it for half an hour like we
I
did
know
yesterday.
I could, and I still got a lot of questions for you about it, and I got a lot of comments. I don't want to talk about them till Sunday. But yeah, that's going to be hot, hot, hot. 0 days to expiration is great. That's taken the world by storm. Those are some of the most heavily traded options on the planet. But what he's done here, and I'm going to end it there, but what he's done with the 0 days to expiration, and he put a little tweak on it, and that bumped up the win rate. And that's why you should have it. And that's all I'm going to say until I talk
Jack.
about it in 10 minutes.
Yeah, Jack, I saw something last night. I was digging around for stuff to talk about today, and I found somebody had posted an analysis of it. They had done a whole lot of math on the call buying showing up in Tesla, and they were pulling off all the extra juice and showing that the same pattern that had happened on Oracle and AMD was actually happening in Tesla under the mass of all the, since it's the most traded single stock ticker out there with options. You had to pull a lot of the extra juice out of it, but they had this analysis and showed that the same buying pattern is showing up in Tesla that showed up in Oracle and AMD right before the big pops. And just imagine if we got a 40% upside right here on Tesla, that could put us up here around 600.
Now, how
Or,
long would it take? How many days to go from 430 to 6?
well, see, that's the thing though. Like if it popped like AMD and Oracle, it could be like a 1 day pop. We could just wake up and it'd be up there.
I know, and that's part of the thing that scares me is that there you won't have really, if you don't just get in it for speculation, you won't have time to get in it. And I'm really shocked when I see AMD, a stock like that, up double-digit percentages in 1 day. That's that's a lot of money poured into it, right? That's something I didn't think could happen.
And that thing popped 33%. And Oracle, I mean, that's the one, I mean,
I
that was
know.
40%.
That's so hard to believe. When you take a look at the market cap, you would think, well, maybe it'll go up, but it can't go up that much because there's just so much stock that has to be bought to move it up. But yet, there you see it right there. I thought that move like that would be almost impossible.
And look at the same pattern that, in the price too, right here. Oracle, then AMD, same kind of price pattern. And then we're kind of setting it up right now in Tesla.
We are.
Another few days, possibly out to earnings, maybe. This thing could drip in here and then pop. So
You know,
now
we got a trade possibly coming up on this thing today at 2 o'clock Eastern time.
that sounds pretty exciting. We'll have to come back to that in a few minutes and tell people more about that. Um, but another way to play that's a little cheaper, if you want that long-term exposure, you can buy shares here. And if we got a 30% or even a 40% pop on Tesla, with this thing having 2x leverage, you could get 60 to 80% here on the same exact move.
Which is why I'm short the 20 strike price put, hoping to have it gifted to me at 20 because I got $2 to sell that put, and that mean I'd be into the TSLL for $18. But I got to get the thing put to me is what I'm hoping every day I watch it here, because otherwise I'm going to have to go long this stock, and I don't mind doing that, but I'd rather have it at 18 than 1950, right?
Yeah,
But
of course. Like, we want to get a deal, right? We don't want to,
man, yeah,
overpay. Right now, if you were to sell the Halloween 20 strike, you could get $2.50.
yeah. Bodine's short the 18 put. I'm short
Yeah,
the 20 put.
I'm short a whole lot. I've rolled them all out yesterday, but I've got some 20 puts, I've got some 2050s, I got some 2150s, I've got some 1950s across different accounts. Uh, I was counting it up yesterday. I think I have 30 short puts on this right now across my accounts.
That's
So
impressive. At all
That'll
different
be
types, or where's it mostly buried?
it's I think the biggest chunk, there's 19 at the 1950 strike out
There
to
you
next week.
Oh, you're right at the money now, brother. And it
Yep.
expires on the 17th?
Yep. 17th.
Yeah, okay. I got a
Uh,
ton of stuff expired on the 17th. We went over that yesterday. ANET, just everything.
so I kind of hope I get put a big chunk of those shares, and then it does that same pattern that we're seeing on Oracle and AMD. So it was an interesting thing. It's not necessarily anybody I've ever followed before. It was just analysis I found, and I was just like, huh, that's an interesting thing. Maybe we should talk about it. But
Yeah.
they were just, doing math and, comparing the pattern, the buying pattern and where it was and, how it would set up the potential for this thing to pop. And, they actually made a prediction that it was going to pop bigger than AMD or Oracle, but the way predictions go. Some
Yeah.
people are right, some people are wrong.
I wouldn't be surprised. This thing is so due. If anything I've seen in the market is due for a rip and a hard one, it's this. It really is. It's shocking to think that this company is one of them that's not making a new all-time high. I keep harping on that, but that's important when all if you're in a class and you're the guy flunking and everybody else is getting a straight A, uh, you got to look at what you're doing. And I think Elon's going to try to do anything he can to get this baby over 550.
These two fib levels, this one 75% likely to get hit, 550, and this one's 70% likely to get hit at 613, and
That
that's
down,
right in that 40% pop higher right there.
write that down. The odds say this thing is going higher, and we've got all kind of options buying to validate that. It still doesn't mean it's going to happen, but everything is lining up for it to happen. I'll say that.
This is just like one of those perfect storm opportunities right here. So
Yeah.
you may kick yourself later. You may sit here and think, I'm not sure. If you're not sure, but you still don't want to miss out, buy a share of TSLL. A share costs you 1950, less than $20, less than you spent on a hamburger at a nice restaurant lately.
Unless you're at the Aspen Airport, it's going to be $40.
And then you can buy two shares. And it still costs you less than a hamburger.
I rarely look at prices. When I go into a restaurant or a store. If I want something, I just buy it. I don't look at the price. But I got some friends, and I've never done this. I've never gone in partying in Aspen to the bars. And the girl here, the daughter of the ranch lady here, she went with her friends, and she said they ordered a round of shots, and it was $300 when
Whew.
for just some shots. And to me, I got $300, but that kind of takes all the fun out of going. You want to go downtown, have a good time, and you get just absolutely fleeced.
Yeah.
So I'm not one for shots and $300 per shot. I did pay $800 one time for two shots. I could tell you about that story someday.
Well, that right there, just to put this in perspective, we're not talking like 600. We're not talking ridiculous high prices here. We're talking about going from right around 20, 1950 up to about 38. And, cool. Log me out there.
Bodine says he was going to sell a 24 strike covered call on his 100 TSLL, but he's going to pull that order off the table after you told him it's set up for a 40% pop.
Yeah. And when that happens, I don't know. Like it could be this week. It could be when earnings happen on the 22nd. It could be something else that Tesla announces out here in November. You
Who
know,
knows? But the
I don't
point
know.
is, TSLL is your better buy, right? One share of Tesla is going to cost you too much compared to one share of this or 10 shares, right? This is going to have more beta. It's going to give you more premium if you sell a naked put. It's going to give you more premium if you sell a covered call. It's cheaper. You could do a you could do a naked put for less than 2 grand on a cash secured basis. Even though it's cash secured, you got to remember it's still a naked put. Whether it's cash secured or on margin, it's still a naked put. The only way it'd be a covered put as if you were short the underlying stock.
Yeah, and you could fly out here to December and sell an upside call at 34, which is like 80% higher, roughly, and still collect $100
Yeah,
for
that's why
for
that
71 days.
I know. It's crazy that they would pay $107 like that. You'd think that that option would be not even 50 cents. But looking at it there at $1.07, that's just so rich. That was why I love selling these naked puts. And if you get the stock, turn around, sell the calls. It's
Yeah,
hard.
yeah, that's an upside call right there for 80% higher, and they're still paying over $100 for 71 days. Something's up.
Something is very expensive.
And and you can go further out and get paid even more. And if you wanted to go up 35, you can fly out here to January and go even higher up. You can go up to 44 in January for $1. So you have options with options right there.
Choices with options. Yeah.
All
Yeah.
right. Bodie said you can also sell a deeper in the money put against it to reduce the required margin. Yeah. I mean, there's lots of stuff you can do when you're playing in options. Definitely. So
Mr. Weeks or Mrs. Weeks says the broker won't let them buy. TSLL says it's restricted.
just call them. They probably want you to know that it's a leveraged instrument, and there's probably a disclosure that they'll make you accept. I've run into this a couple brokers that they just want you to make sure that you understand that it can go to zero if Tesla had a 50% drop. TSLL could get liquidated in one day.
Yeah. So, Mr. or Mrs. Weeks, chat with your broker. Um, Rob says I have TSLL in my Roth. Yeah, you should still be able to buy it.
This is high risk. If Tesla took a 50% pullback, which isn't even going to 100, that's just going down to 215, this thing could go out of business. This thing could get liquidated. So if for some reason Elon got caught with a bunch of dead girls in the back of a Tesla and all the company's money in the back seat,
And a pound
this thing could go to zero. So just be aware.
yeah, just be aware. And that's probably why the broker says, Bodine says that could happen with. I don't think he'd have a pound of cocaine. He might have a pound of ketamine, but
I don't think he's that bad a dude. Actually, he's just a big nerd and
he,
misunderstood. But
no, but the Department of Defense knew he was doing too much ketamine, so they didn't even want him in the building. He's high on that during the day. You saw that one thing where he was in the restaurant with the knife and the spoon, and he made it like a little airplane, and he's holding it up. He's going,
hey, I do that sort of stuff, Jack. I don't do drugs. I
"A
do
lot
that sort
alike.
of
You guys are a lot alike in your way.
stuff.
You're a bit of a what's the word? Eccentric, maybe.
Uh,
But
you know, yeah, you told the story about getting beat up, or fleeced down for the first day of school, high school. Yeah, I ended up being valedictorian, and I got picked on for a whole different reason because I was like the biggest nerd. So
I
anyway,
don't think I ever got a B in school. But hey, C's get degrees.
yeah, yeah. I mean, I caught a hard lesson when I went to college. I wasn't used to studying. I actually slept through most of middle school and high school because it was just so easy. And then I got to college and actually found the wall where I actually had to study. I had to try to teach myself this stuff because it was it took a step above. And but I
I
did stuff like take graduate classes in AI and stuff like that just for fun. So
I flunked ninth grade math. That shouldn't come as any surprise. But I was looking at this girl. I could tell you the whole story. I just so distracted by her. When I was in ninth grade, I should have just been in like all boys school because all kind of stuff's going on in ninth grade, and I was distracted.
all right, Jack, here's another one. A lot more boring, but still paying a hefty premium here. It's not much more, beta than the S&P right now after it's been sitting here. It was a little higher, but now it's kind of chilled out. But I'm still collecting a hefty premium on this baby.
And you got a real upside pop coming in that thing because that gap where the gap gapped down, That gap has to be filled in going forward. So this thing looks poised to move higher.
I've been rolling this particular 22 put right here. I've actually got a couple bucks of credit built in, so I'm pretty much, even if I get put at 22, I'm still in profit, even with it down slightly. And I just keep rolling on the premium here because the premium here is kind of crazy. 1% premium for 1 day left. Look at that. 20 cents on a $20. That's
Yeah, so some of these options, you might almost say they're mispriced, but they're just higher than what I've ever seen before. I've never seen in 40 years where you could make this much money selling calls and selling puts. I've never seen it like this. And that's because of the retail mom and pops rushing in buying options. They're jacking the prices up. The demand for them is higher than I've ever seen for calls. And puts are priced so high, it's ridiculous.
This has a nested pattern where it's self-similar in a smaller degree here. And if this thing plays out, it should come running up here for a 3, and then a 4, and then a 5, and then another 4, and then another 5. And I could catch a pretty big upside here on something that's 20 bucks right now. I could I could double my money potentially on these shares. And I just keep giving it the red hat treatment. Being persistent and stubborn and just keep doing the same thing over and over.
Yeah, and you're getting a nice yield, a nice dividend. That's way higher than what the market's paying in dividend, 3.19. And that's a qualified dividend, so that'd only be taxed at either 15 or 20%, not 37% ordinary income.
So I mean, there's a lot going for this one right here. It's not glorious. They're not deploying AI to make underwear or pants or shorts or shirts or any of that stuff. And it's kind of been sitting here in this range, consolidating. Normally that would be a flag for me to stay away from it when it goes sideways for 2 years. But the premium is so freaking juicy on this one. It just keeps me coming back to the table week after week after week.
That gap down tells me it's poised for a move higher, right? Yeah,
Yeah,
right.
right there.
Yeah, right, exactly. And higher than that high point on the would be more like 30. The next run would
Yeah.
take it over that peak.
Yeah. 32 is probably a good target right there for me. That would
Yeah,
be just from 20 to up to 32. You're looking at what, 60% profit right there?
strong. Kathy asks the difference between having a qualified dividend and a non-qualified dividend. A REIT, real estate investment
Oh,
trust, that won't have a qualified dividend. Neither will a lot of midstream oil and gas partnerships like Energy Transfer, uh, Enterprise Products Partners. A lot of those don't have a qualified dividend. So what happens if it's paying a dividend that's not qualified? Then, like in my case, if it's not qualified, the dividend is taxed at ordinary income. And for me, that's 37%. If it's a qualified dividend, it starts out at 15% tax, depending upon your tax rate. The highest a qualified dividend tax could be is 20%. That's why billionaires love to have the bulk of their money in qualified dividend stocks because billionaires hate paying taxes more than anybody else. And I learned a lot about that from some of these dudes. So it's you could just go to Google and type in does whatever stock pay a qualified dividend, and most regular companies do. Coca-Cola, McDonald's, all that stuff does. But like Realty Income Corp that I own in my IRA, that's not a qualified dividend. Energy Transfer, a lot of these midstream partnerships are not. So that's the only thing. But it's the lowest tax rate in the world, and it's not taxed in a retirement account. They leave that retirement accounts are not taxed. So you got a dividend in there. Either way, you're good, whether it's qualified or not qualified. But if you're just trying to live on dividends, you don't want that non-qualified dividend. You're going to pay more. So, for example, if you got a 7% yield in a non-qualified dividend, and you're being taxed at 37%, that's a big hit, right? Compared to a 6% where it is paying a qualified dividend. Yeah. Carol says I only trade dividends in a retirement account. Yeah, I got it in retirement and out of retirement because eventually I want to bring in, 15,000 a month in dividends at the lowest tax rate possible. That'd be pretty sweet.
That's my goal over here. I want to build this account into a monster that generates 50K a month in dividends,
That's
and
beautiful. I
and then be
love
able to, right now 1 month profit is only 2K, and that's me trading. So I got a ways to go, but I'm gonna do it.
But you're persistent, right? You just showed us with Red Hat, 18 years, you're going to do it. And the other thing I love about dividend stocks, I could go on and on and on about my love for them. But, you take a company like McDonald's, you take any one of these companies, McDonald's is $300. It could go to $3 and it's still going to pay the dividend because the price of the stock has nothing to do with the dividend payment. So, when I look at my dividend account, my Freedom portfolio, I don't look at it. Everybody logs into their account and they look at their P&L. Are they up or are they down? I look at the investment income. That's all I care about. I know the portfolio is going to go up over time because they're great quality stocks, but in the meantime, I just want to look at the dividend. Devanshi wants to know what is the dividend stock you invested in, Jeffrey?
What which one?
You
Which ones? Like I have like 30 or 40 different ones. Um I It's just one of those things. Like I offer something called double dip trades. It's a front end service. We don't sell it very often. Right now, I think the only way you can get it is to be one of my all access members. And I hold a portfolio of dividend paying stocks. A lot of a lot of stuff like uh, let's see, CSWC, I think it is Capital Southwest. This is one of those that Jack said he doesn't necessarily, you know, go into. This one's getting hammered right now. Right now with the kind of market environment.
See, this is what I call a yield trap. The stock goes down more than the dividend. So you got 11.2% dividend yield, and the stock's gone down.
But
What's
this
it?
one, this one does move, and over the long term, it makes these volatile moves, but it does trend much higher, and that's without even taking into the account the dividend. And this is a little bit different than a dividend trap because long term, since all the way back here in the 70s, capital appreciation has been their game. It just takes a while and has some swings to it.
I don't have anything that has a yield near that. I
Now
think the
this
price
is not
difference.
like big money. I have 2 shares in a small $8,000 account. I
That's
have like I have 30 or 40 positions like that. Just one, two, five, 10 shares in lots of stuff like this. And I spread out that risk. One of my members did a lot of calculations and found that if you hold 60 high dividend paying positions across multiple of these sectors that pay, any one or even two blowing out doesn't cause major damage to your account.
but that might be over diversification.
It could be, but it's at the same. We're working on it. It's a thing we're working on. I might bring him on as a sidekick here when he is forcibly retired from the airlines next year. We'll see. Um, he does a lot of work on this stuff. He's been changing over his retirement account from him having to trade it and generate money to a cash generating machine. Right now, he's got a little over a year of making $12,000 a month in dividends
Wow.
right there. So he actively manages it, and he's found out a lot of stuff along the way. And right now, BDCs, what they call BDCs, are getting hammered right now.
That's a business development company, people, and they pay super high yields because all they do is make loans for super high rates. So if you're a company, a small company mostly that needs some money, business development company is more than willing to lend it to you at a high rate and in return pay out. I mean, look, if they're paying 11% a year, they're pushing loans out there that are way higher than that. And people say, why would a business take out an 18% loan? Well, if they're making 30% or more, 36% or more, then the price of the loan doesn't matter. It's the availability. Can I get the money? That's what they talk about, the availability of the capital.
And some of the, some of your smaller companies, some that aren't open, if they're not listed, they can't access the capital markets. They can't write bonds, and they have to go to some of these BDCs to borrow money because there's nobody with enough capital out there that can loan them the cash they need to make the investment they need in their business. They may be looking at, maybe not 30% return, but they may be looking at, 2, 3, 400% return. But they need some sort of capital injection to be able to make that investment to take the next step up in their business.
That's why they don't care about the rate, they just care about the availability. Take one quick look at PSEC. That's one. Have you ever looked at that one?
Yeah, I actually have some of this too. PSEC.
Yield on that sucker. Look
I've
at
got some of this. 19%. I don't
woo,
have much, but it does keep grinding down too. Like this one.
grinding down. Main Street Capital, Bodine says that's probably the second big one. Prospect Capital and Main Street. Man, I hate this stuff.
I actually have a list of this stuff. Let me see if I can find it.
I hate them. I hate those, and I hate the mortgage uh, deals.
And these aren't necessarily all BDCs. These are higher returning, and this one's only 7.95 compared to 11. Yeah, this one's been chopping sideways, even on the adjusted basis. Right there, KYN. This one's been chopping sideways on an adjusted basis.
Devanshi, we're going to stay in that trade, but you could just get out anytime you want. But I'm going to stay in it all the way.
This one potentially made a big bottom right here, coming back up. I've got, I have, I have hundreds of these in this watch list right here. And you may be like, well, how did you find these? You just go Google dividend paying stocks and you can get all the lists you want out there.
Agency is another one, AGNC. And George says NMFC. Yeah, there's tons of them out there.
And some of them are real estate investment trusts. Some of them are, and there's all sorts of different stuff in this. Yeah, this one's a real estate.
You don't really buy it for the upside.
This one's a real estate asset income fund. There's, you kind of have to, you could spend a whole lot of time diving in to figure out what a lot of these companies do.
And look at their portfolio of loans. Yeah.
Yeah, I have a bunch of exposure to this one. And we got into this one back here at what I thought was a low, and it turns out that it's coming back up pretty good. So, and they're all over the place on price too. This one's $4.35 a share, pays a 13.49% dividend. I mean, and most of these I don't dividend reinvestment. This is where Goose and I differ. He likes to drip, which is dividend reinvestment program. He likes to put that money back into the same stock. I like to capture the dividend and then deploy it to new opportunities and diversify.
I do both. I've got some really high paying dividend stocks that I've already got all the position I want in it. So when that dividend comes in, I buy other stocks with it. And others that I don't have the full position that I want, I dividend reinvest that straight in. But either way, that's compounding. And that's the eighth wonder of the world, compounding. And if you're selling calls and you're buying the same stock with the premium and you're dividend reinvesting, that's compounding on steroids. That's the biggest wealth hack in the world is compounding. So make sure you're doing it on something. Just so you know, 80% of my wealth is in dividends and T-bill, and the other 20% is what I trade. So I want that good, strong foundation. I believe everybody should have a foundation in dividends before they go into risky trading.
Yeah, this one.
Yeah, that's a big one.
This one has been going sideways for a long time right here. Like you zoom out and it's just a lot of sideways.
What's the yield?
The yield on Nally is sitting at 13% right now. These guys will notoriously pay out some of the book value and some of the NAV. And then all of a sudden they're not paying out some of the book value and NAV. So you got to be careful on this one.
Funny business. A lot of shenanigans and monkey business going on in there.
So you look at it on a long term when you adjust it for the dividend, they're actually sitting at nearly all-time highs right here when adjusted for the dividend. But when you don't, they're sitting down here at kind of grinding at the bottom.
The ideal situation is you've got a stock trending higher and you're reinvesting the dividend in that. That's the ultimate.
Yeah, there's all sorts of, you can go down these traps where you get into some of these real estate investment companies in particular. You get into dividend traps, and I kind of draw the line at 12%. Like if it's paying over 12%, usually that means they're paying out their net asset value into the dividend, which is capital return, not capital appreciation.
Yeah, I'm
And
I'm capped at about 7%. Anything over that, I don't want it.
you can see this one just constantly grinds into the dirt right here.
And that's what I hate. And the yield is fine, but when you're watching that underlying asset just get destroyed, man, that was what, $60, $65 down to
Well,
50.
it's got some splits in here. I'm 90% sure. So it
Danger.
does, yeah, it does these reverse splits to stay listed, and then just keeps grinding, paying out that NAV, grinding it into the dirt.
Reverse split is a bad sign. Now, the only REIT that I have is Realty Income Corp. It's the only one, and I have that in an IRA because I don't want to pay. But I've owned this thing for, oh God, I don't know.
But even with the dividend, it hadn't really gone anywhere.
No, hasn't gone anywhere. And that's the thing that over time you realize, this is a great company, but price appreciation has not been there.
And we can see all the way back to 2018, we're basically at the same place we've been. So it's not getting you any benefit from holding, just paying you out the dividends.
5.48% tax free.
So
Yeah.
you got to be careful where you put your money. A lot of people use this one as a flight to safety when things get a little uncertain. You see money flock to this one. We kind of saw that early in 22, flight to safety, and then it looked like things were going to turn around, and it plummeted off as the market turned and recovered. And then it's just been chopping down here ever since. So
Flight.
it's an interesting, when you get into dividends, it's an interesting thing. This one was rocking and rolling as the cell phone network build out was expanding at a crazy pace. But guess what happened right in here? Space satellite cell phone towers. All of a sudden, AMT's business is threatened a little bit. So
Devanshi says Realty Income is going to sell notes. Yeah, that's the thing I absolutely hate is not just selling notes, but anytime a company does a secondary offering or another offering of stock or notes, convertibles, your equity in the company goes down. When you have a company doing buybacks and reducing the number of shares outstanding, your equity in the company goes up. But yeah, if they're paying out 5% and they're issuing millions and millions of dollars of stock to go buy more property, price per share is going to be flat.
yeah, and so that's the trap you can get into with dividends. But Jack, I know you have a system that is kind of like better than paying dividends, and we were teasing it earlier.
We are manufacturing our own dividend.
That's a good way to put it right there. And potentially you have a trade coming out later today.
Later today, 2 o'clock Eastern time. Uh, that's when we will either get the signal or not get the signal. And just to give you a little background on this, we had a great strategy with Tesla, an options strategy, and it was at about 65% win rate, which is good. If you're 55% win rate, you can make money. A 52% win rate, you can make money. The problem is, if you're 55% win rate, the problem is that the 45% you're losing is going to kill you emotionally, which is why we wanted to get this win rate up from 65 to whatever it is, 85 now. Yeah. 9 wins in a row on this one. Yeah. So we got a green light that we'll either get it or we won't get it today at 2 o'clock Eastern time, which would give you all day after 2 to get in today and all day tomorrow if you wanted to get in. And it's predicated on when the data lines up for a 1 to 2% move higher. Even if Tesla's been going down, when we put this trade on, we're in it for, we do it today, we expire the next Friday, next week. That's the longest we're in it. So if the data lines up to get that pop in that time frame, then we'll go in with a trade you can get into for 125 bucks or more. And we're targeting 54% every time we get in. We got 9 wins in a row. It's something I think everybody should do. I do
Yeah,
it.
and you were talking about, just this brings home the point too, is if you're trying to capture some upside in Tesla, and this is, this isn't even really trying to catch upside necessarily. It is bullish slanted, but you're just trying to catch some volatility in Tesla. But if you were to come in here and buy one of these at the monies right now, look at that cost.
Yeah, you're paying $1,350 for one call, folks. Now, if
That's
you
$1,355 right now to buy that 430 call. And then if you were like, well, I can go cheaper by coming out of the money, okay, this has 8 days left. And even up to 440, you would need a roughly $10 move higher just to be at the money. And then you need a $10 move higher than that to turn this into break even. So already you need a $20 move higher just to break even. This gets the dynamics here. This is why call buyers lose money. Unless you're really, really, really right.
They don't realize that the move is already priced into the option. That's why it's got to move even more, right? Which makes it
And
a terrible proposition. So
you know,
how do
for
we make it a good proposition?
for 8 days right here, Tesla, the market makers on Tesla are pricing in almost a $26 move higher or lower. They think that that's like Tesla's going to play in basically a $52 range for the next 8 days. Whew, that's pretty big. I don't know about you. That's a pretty rich range right there.
It's range, but instead of paying $1,350, how can we get this down to where we can get into it for less than 200 instead of 1,300?
So Jack's trade uses something called a debit spread, where a lot of people have been used to playing credit spreads, and your risk reward can be kind of skewed when you do that. But this one, your exact risk going in. The trade looks something like this. If this is not a good valid trade right now, 2 o'clock, we know if it is or not. But right now, if it was, you would buy this one and sell this one. You straddle the at the money with
So, so,
those.
so instead of paying 1,395 or 1,400 for one call, you'd buy that 430 call, and that'd be really expensive, 1,385 bucks. But then you're going to buy the 430 call, then you're going to sell the 432.50 call, right? And then now you're into the trade for $1.25, which is $125 per trade instead of 1,385. You're in it for 125. And all we need is about a 2% move in the stock to see this go up 50%. So the
Yeah,
way
we're not even going for the max. The max right now would be the difference in the strikes, which would be $2.50. Of course, your profit would only be difference in the strikes minus what you paid to get in the trade. So about $1.25. Now, what Jack's saying is you can up the win rate and the profitability by only going for 50% of that upside, or about 65 cents roughly.
So I would buy this debit spread if we get the green light today for $125 per contract. I'd put in about 5 grand to try to make 2709. And if I bought it at $1.25, this very second I got filled, I'd turn around and put it for sale, good till cancel, at $1.25 plus 50% of $1.25. So I'd put it out there for sale at $2.
So 10 of the, basically we've reduced the cost over 90% to get involved in this trade. And taking it down from needing like a $20 move higher or $30 move higher just to make our 50% gain to only needing a 1 to 2% move higher. So it really tilted the odds in our favor because Tesla the last few days has been moving 4% a day.
I can't wait for today at 2 o'clock is why I say it. And Dakota, if you got it ready to roll, let's tell the good folks how they can get in on this next trade today.
Yeah, Jack and I have done presentations and other gurus. This is a pretty hot trade right here, and Jack's got a whole presentation to tell you more about it. So I think Dakota can play this replay for us here if he's ready.
You'll love it. I know I love it. And today's the day, folks.